Hey everyone, it's Mike Bond with Hard Money Mike. Today we're going to go over what is the difference between hard money, private money, and fix and flip loans. A question we hear a lot is, why does hard money cost more? Or what's the difference between fix and flip and private lending? And I wanted to go through those options for investors out there. What's the difference in structure, what they look for, and in pricing? So the lending world really morphed about 5 to 7 years ago when a lot of Wall Street money came in, because before it was a lot of just pure private local hard money lenders who are lending to fix and flip people, maybe some banks and some larger institutions. But now there's all these large lenders out there lending to fix and flips, pop tops, and even rental properties. So what's the big difference between traditional, what people call hard money, and this new wave of private money? It typically comes down to two things. And it's not pricing, because the majority of the time, what we see is hard money. The lending that is out there that's called hard money is really kind of in the middle for pricing. You're going to find some who, with the experience, you have 8 to 10 properties, yes, the Kiavis, and then we're going to give you better rates. But people with 3 or less, or maybe some unique things, typically what you're going to find is that hard money is as competitive or actually better priced. So it's not really the price, it's really the box that they fit in. What kind of loans do each individual or company do? So let's run through that. So when you're talking the big boys, the Kiavis, RCNs, Lima One, whoever may be merchants out there, they all have a box. You either fit in it or you don't. Typically, it's up to 90% of the purchase price, 100% of the rehab. They're looking for loans 150 and larger, and also typically where the purchase price is greater than the rehab. There are lenders out there who will do where they're more like scrapes or pop tops, but the cookie cutter lenders out there are looking for anything that fits in their box, because all this money is going to Wall Street. So it is your standard fix and flip, fix and hold, DSCR, typically, like I said, 90% loan amount, 10% down on the purchase, 100% on the rehab. And now they come in all different names: private lending, fix and flip loans, whatever it is, it's still the same box. When you're shopping out there, you're going to find all these people have pretty much the same thing based on a credit score, based on your experience, and based on the amount that you can put into it in liquidity. They will lend you whatever fits in their box. And the boxes are not that different from lender to lender. Pricing may be, I know with some of the larger ones, the more experience you have, the lower their rates and some of the fees. But if you go through their retail operations, you're going to find rates and points probably even higher than you will with true hard money. So what is true hard money, and where do you find it? What does it do? Well, true hard money is asset-based lending. So it is the opposite of what the big boys do. So there's a place for it. There's a place for the big boys, and there's a place for hard money lending. Typically, hard money lending is small, local institution shops, even just people who are lending money on real estate transactions. Almost all of this lending is done for real estate investors. So it could be something like up to 100% financing if the deal's right. It could be a first, it could be a second, it could be on land, it could be a construction. As long as the deal makes sense, hard money is the flexible lender when you're out there looking. Even if you're a brand new borrower, you can get up to 100% in hard money. You just have to find a good deal. So here's a few things on the hard money that we see that we do. 100% financing on flips, 100% financing on burrs. We call it a 911 loan, where we pay off your credit card balances so your credit score goes up so you can get another loan. We do first, seconds, finish a project loans. The box is expanded just because hard money lenders are looking for loans that make sense and have a path to being paid off. Because hard money lenders, like any lender, their whole goal is to lend out money, get it back, plus the interest. Hard money lenders could do cross liens, so you could use another property to get the 100% or more money out. When it comes down to it, hard money is more flexible, not always more costly. The name hard money is just, in some people's world out there, it just has a negative connotation. But when you're looking at it as an investor, what you should be looking for is, will it close? Can I get the deal done? And what will it cost me? I would say in most markets, especially for borrowers who are looking to close fast, get higher leverage, that's where you're looking for hard money. If you have the time, you have the experience, you have the credit score, you have the money to put down, private lending is where you fit. There is a lender for every deal out there, and you just kind of find and talk to the different lenders. And that's why we have at Hard Money Mike, we have the loan cost optimizer. It's a download, it's free. You go and you could shop around, get the best rate for your deal. It'll tell you like, how much do I have to put down? What's the total cost for my 3, 6, or 9 month flip? It's easy, it's free. Like I said, we're here to make sure you fit in the right box. If it's private lending, yeah, we could refer you out to some of the best private lenders around. But if there's something for smaller loans, deals in small communities, unique transactions, that's where hard money really comes into play. If you have any questions, just leave a comment below. We always try to answer them in a timely manner, and we'll catch you on the next video.